Hi everyone, it's Maggie. Our world is changing, and so has the stock market's price action look and feel. Here's a chart of the S&P from 2013 to 2017. Note the average daily volume was around 100 million shares a day, and in 2017 that average dropped a little to below 80 million shares traded each day. There were a few hiccups along the way, but generally the market traded up in a nice gentle upslope, occasionally bouncing off the 200-day moving average. The 4-year gain was just a little over 93%. Now let's look at the next 4 years from 2018 to 2022. Doesn't look so smooth, does it? The average volume spiked back up to over 100 million shares traded each day, and while the market generally went up, the price action was bumpy and erratic. Also, the percentage gain for those 4 years was only 52% compared to the 93% for the previous 4-year period. Now let's look at this year. Yes, the scale is different, but it's easy to see how erratic the market has become. This year, the S&P is down 15.5%, and the NASDAQ is down 28.2%. Trading volume's about the same as it had been, but we're also seeing moving averages converge and then diverge with crossovers indicating even more trading chaos. So what's a trader to do amongst all this chaos and uncertainty? Well, 1, recognize there's a new normal out there. And 2, don't try to keep trading the same old way. What worked really well in 2017 will not work in today's market at all. As a trader, you probably have a lot of different setups in your trading arsenal. Go through them one by one and ask yourself the question, will this trade setup bring me success, or does it just point to a losing scenario? So let's look at a few of those scenarios. How about buy and hold a stock over time? I don't think so. How about buying options depending on the market direction? Well, that can work, but notice how short the time periods are. So you're in and out of a trade in less than a week a lot of times. And so you have to be paying really good attention to your trades. Some other choices you have are debit and credit spreads. Again, they're directional, and you have to kind of calculate how the market is moving day to day. Iron condors. Now, I did a bunch of them this year. They did fine, but the market also had slowed down and was going sideways. Credit diagonal verticals will do well. So the main thing to keep in mind as you trade in this chaos is to make sure to match your trade to what is really happening. And second, realize even though trading is rough right now, it won't be the same in just a short time. The market changes day to day. Becoming an educated thinker is the only way to navigate rough waters for incredible returns. How have I fared in this year, 2022? On most people's scale, I'm doing really well. As I write this, our data class has just finished the 8th week of trading, and my account is up about 52% through those 8 weeks. I will also let you know I've struggled, and I'm feeling a little discontented with my returns. I know that by most standards, gaining 52% over a rough 8 weeks of trading is considered phenomenal. But normally by the 8th week, I've doubled my trading account, and that's where my discontent is coming from. Our next data session starts on Thursday, January 12th. But if you're brand new to trading or have minimal trading experience, I have a couple of suggestions for you to get started on the right foot. Brand new to trading? Grab our Trading Blueprint for Beginners. The course is only $24.95, but it's going to set you up so you won't have missteps. We have a whole journey of courses at Investing Buddies. To easily determine your starting point, take the quiz by hitting the button below. I have prepared all of this for you because, 1, I love to trade. It's fun for me, and I believe it should be fun for you too. The second reason is I learned my trading over a 20-year period through a lot of trial and error, and some of those errors were really painful. I want your journey to be a lot smoother, more concise, and a lot less painful. So I'm looking forward to having you join us at Investing Buddies. This is Maggie signing off.